What does the person do in this case? Partners. But before I introduce him, I just ask everyone to please put your phones on silent or vibrate. There's nothing worse than being next to a person who's talking very softly and you can't hear, and everybody's come here to focus on their money because money matters. Please either turn off or turn on vibrate. The bathroom is outside to your left. It is a round frame door. It's always important to know where the bathroom is if you've never been here before. Phil is an accountant who really has worked with Nefesh and Nefesh Olim for years and years and years. And we always appreciate him staying one step ahead of the game in terms of what you need to know to help you get further because money really matters. So I turn the floor over to you. With Phil, one last thing. If everybody was given, and if you need, I'm happy to give paper and pen so that your questions can wait more to the end. Please indicate if you didn't hear something, if something isn't clear. But if you have a question, please wait until the end so that people who do want to leave towards the very end can, if they so decide to do so. Again, please put your phones on vibrate. And Phil, thank you very much.
Thank you very much. Good evening. The program tonight, I'm Philip Stein. The program tonight is, there's three of us will be speaking. What? Sorry. Three of us will be speaking. I'm going to speak on how, well, let me back up a step. 9 years ago, about this time of the year in October, I received a call from Yoshua Fass, who I'm sure all of you know, and he had just stepped out of a committee meeting at the Knesset, and he said, it's going to happen, we are going to get this exemption. It's about to go through, and he said, and they're going to make it retroactive to January 1st, 2007. Well, that seemed like a long time ago. It is a long time ago, and it seemed like 10 years was an eternity, but we are actually getting to the end of that. Those first people who were beneficiaries of that law, a lot of people who came at the end of 2006, let's say the summer of 2006, and took a position that they didn't really become tax residents until January 1st, 2007. And that benefit is about to come to an end. So I felt it was appropriate, and I appreciate my thanking Nefesh B'Nefesh. Should I be changing? I haven't, sorry. Okay. Nefesh B'Nefesh agreeing to sponsor this event. I'll be speaking first about some U.S. tax filings and aspects. My colleague, Attorney Yair Binyamini, he will be speaking probably the most interesting part about what you might be able to still do before the clock strikes 12, before January 1st, 2017. And my dear colleague Yoel Shalvi will be speaking about things you have to know and things you're going to have to do if you are now going to start having to pay Israeli taxes and how to comply and just a lot of the mechanics involved. So we're basically going to be speaking in 20-minute segments. This is also being streamed. We'll be able to, you can even look at it, I believe, after the fact. So there are a lot of people around the world watching this event as well, besides those of you who are sitting here in Yerushalayim, Yeret Kodesh. So let me start. What I called my presentation is what you need to know and what you need to do if your 10-year tax exemption is expiring in 2017. But again, my remarks are going to be from the U.S. tax point of view. Let's see if this clicker... Okay, it's not working, so let's... Okay, so first of all, I just want to review quickly what you should have been filing. All of you, if you've been here for 10 years or 9.5 years or even a little less, that maybe your exemption isn't expiring till sometime in 2017. If you had a bank account here, if any time you had more than $10,000 or $10,000 equivalent, you should have been filing what we still call the FBAR form. That is something that was filed traditionally every June 30th. It was not part of your tax return. It's a very simple filing. If you haven't been filing that form, in other words, you've been over $10,000, be it your checking, your savings, your pension accounts, there are programs to get you caught up, and we can help you with that. If you, at one point in your tax planning, set up an Israeli corp, which is something very popular, it's advice we often give people when they move here in order to avoid self-employment tax, that is still, you're still required to tell the United States government about that company. It's, there's a form called 5471. If you own and control or controlled foreign corporation, that is the form that you should have been filing all along, and also the IRS has programs to catch up if you've been delinquent in that respect. And of course, if you've been filing a U.S. tax return, U.S. citizens are required to report their worldwide income. So if you haven't been reporting income that you have here, the IRS also has a program for that. It's basically streamlined, which can allow you to get caught up. And actually, this is probably the easiest time for someone who didn't willfully fail to file or fail to report to get back in the system. It's pretty painless. Okay, my clicker is not going to be working. Okay, so what remains the same for people? They've moved here, they've been living here, the 10-year exemption is about to expire. Well, if they were getting Social Security before or continue to get it, nothing changes. That is a provision that's in the treaty, which it says it's non-taxable from the day you got here till the day you stop getting it. You're no longer a recipient for any reason. In other words, your 10-year exemption expiration will not affect if you're a recipient of Social Security. Any income that you have from U.S. sources, and we'll talk about a little later, that are coming from a U.S., let's say, rental property, well, just because you might have to now be paying some Israeli tax, and that doesn't mean it's still not taxable in the U.S. And even though you will be subject to Israeli tax now on some of your income, there is no double taxation. In other words, we've had a treaty since 1995, and there is, you pay the higher, but you won't pay double. So, what changes after 10 years? Well, I'll talk about three things here. One is who gets the first bite. In other words, you now have income. You're reporting your worldwide income, and Israel now is saying, well, I'm now entitled to tax some of that income that maybe before you didn't have to even tell me about. So who gets the first bite? Does the U.S. get? I'll talk about it in a moment. There has been a treaty, as I said, for over 20 years, and that sometimes or often trumps local laws, both U.S. and Israel. And what I say here is you'll pay the highest tax, meaning if you were paying, if Israel has a 25% tax, and that's what they do on passive income, be it interest, dividends, capital gains, and you're only paying 18% or 13% to the United States, well, now you're going to move up. You're going to pay a difference to get to 25. So you're always going to go to the highest. And the reverse, if Israel only charges you 25 on interest and you're in the 28% tax bracket in the United States, you may pay Israel 25 and you'll have to pay the other 3 to Uncle Sam. Okay, so this is just very pashut, as they say, very simple way to remember. 3 categories of very popular income that up until now may have been exempt if you had left the money in the U.S., be it interest income, capital gains, or U.S. source dividends. That means dividends from U.S. stocks, be it a publicly traded company or a privately company. So if you're earning interest from Citibank or Bank of America and you haven't been declaring it, which you didn't have to, and you haven't been paying tax on, which you didn't have to, now, even though it comes from a U.S. bank, Israel, you will get the first bite. Same applies to capital gains portfolio. Israel will get the first bite, meaning you'll pay the 25% tax first to Israel, and then you'll get a credit on your U.S. tax return or whatever other country you might still have to file. But usually the U.S. is the only country that requires that. But if you have dividends from Microsoft or I don't think Tesla's paying dividends yet, but U.S.-based companies, then you'll pay your 15 or 20% first to Uncle Sam, and then you'll get a credit by Israel. What about U.S. rental income? The U.S. gets the first bite. Pensions, even if it's coming from a U.S. pension fund or an IRA fund or a 401k, Israel, if you're a tax resident here and it's defined as a pension, will get the first bite. And generally, for most people, I'll talk about it a little longer in a moment, consulting, if you have a consulting practice, Israel will get the first bite, even if you're doing some of the work in the U.S. Okay, pensions. Some of you may be interested if you are retirees. Um, there's a little history here. I was fortunate to be involved in that as well back in 2002. So that's also a long time ago, 15 years ago. Israel passed a very comprehensive change to their tax system where they went from a territorial to taxing you on your personality. That meant that people who had been living here and were getting pensions from abroad would now have to start paying taxes to Israel on that. We were part of a lobby group. At that time it was sponsored by another organization that benefits Olim, AACI, Americans, I think that was before there was a Nefesh B'Nefesh, and we lobbied for the Knesset to give us a break for people who were getting pensions who were already living here, but it rolls over to people who are making aliyah or are now their 10-year exemption. And basically what it is, and I put here special tax calculation, that let's say you have a pension of $30,000 and today you pay $5,000 on that to the United States. You will still only pay $5,000, but you may pay $3 to Israel and $2 to Uncle Sam. In other words, it was a provision put in to keep your tax bite neutral, so that the fact that you're subject to Israeli tax won't raise your tax. And that's something we do, especially with Yoel's office. He's an expert in this calculation. So I call it tax neutral. And probably most people who are living in Israel are happy to be paying tax to Israel now instead of to the U.S. And this is all based between the change in the Israeli legislation and the treaty, which allows for it as well. If you have real estate income, Israel will give you a credit not only for your federal tax, meaning you have rental income, but they will also give you a credit for state tax, which is not something that's in the treaty. But again, going back about 15 years, a little longer, the dot-com era, Israel realized the Israelis were also paying state tax, and they unilaterally give a credit for state tax on income that's subject, where in this case, let's say, state of New York or California is also entitled to the first bite. Israel also gives you a choice that you can report your real estate income just like you do to Uncle Sam, total income less total expenses, and you pay at your marginal rate. Or they give you a path, a maslul as they say in Hebrew, where you can declare the rent, just less the depreciation, not take any credits, and pay a flat 15%. So sometimes that makes sense for people if they're not paying very much tax or any tax in the U.S., but it's a choice that an Israeli account can help you make. Last thing is 1031 exchanges, where these are known as swaps or exchanges. Israel, about 2 years ago, said they will no longer recognize those. So if you are anticipating doing an exchange, if you do it after the fact, after exemption expires, it will be partially taxable. If you're still working for a U.S. employer, we have a lot of people we come across who stayed on their U.S. payroll. You're now going to have to carefully count days where you're performing the services, where you're working, because if you're working in the U.S. gets the first bite. If you're working for that U.S. employer in Israel, Israel gets the first bite. And we suggest that if you've been paying U.S. tax and they've been withholding for you, that you should go to your employer. There are mechanisms to adjust your withholding to take into account that you'll be paying Israeli tax. I put up here as a third point here, there was a recent, any of you can look it up. It was a rare case. We don't usually see cases like that. It's called Hirsch versus the United States of America, or IRS Commissioner. And he had made Aliyah years ago, moved to Ra'anana, was working for one of the big brokerage houses, wasn't licensed to do business here, but he said he was doing prep work and he was helping his clients from afar, and then when he would get to the States. And this case, without getting too technical, said that this person was not resident in Israel for purposes of either taking what's called the 9/11 exclusion, foreigner and income exclusion, or for deducting his travel back to the States. So this is a very significant case of people who have only moved here and work as a convenience for themselves. In other words, the employer didn't send them here, but they're just doing it for their own convenience. These people really have to relook at their situation and maybe have to change their arrangement. If you're working for an Israeli employer, just because you go to the States on business doesn't mean you're taxed unless you go over 182 days in a calendar year, and then the U.S. has rights to tax you on the days. Again, you have to count your days. Of course, Israeli rates are higher than the U.S. We get, first of all, there's no 48% or 50% bracket in the United States, which we have here, and if you do it, you get to that higher rate much quicker than in the U.S. But just to remind people, if you work for an Israeli employer, you are not subject to Social Security on those wages, only income tax. Consultant, same thing applies. You get on a plane. If you spend less than 183 days in the U.S., you just pay all your tax to Israel. If you go over that, again, there's a credit system. Problem with people who are consultants or self-employed, now they're going to be subject to Israeli tax and perhaps U.S. tax, that they're also going to be taxed and they'll be subject to self-employment tax, otherwise known as Social Security, and Bituach Leumi. I've spoken to one of the authors of the original legislation back in 2008, and he said that was not the intention of the legislation, but that is not what appears in the legislation. So having had meetings with Nefesh B'Nefesh at Bituach Leumi, it fell through the cracks, and although Bituach Leumi is willing to try to solve this problem, Nefesh B'Nefesh is working them on their legislative end. Right now, if you are self-employed and are now, you're out of the exemption period, or even before you were subject to Social Security and Bituach Leumi, Yoel may go into that a little later, and you should check your status. Maybe under U.S. law, you aren't even an independent contractor. I think I hit my 20 minutes. This is how you can reach us. That's our phone number here in Yerushalayim. We also have offices in Beit Shemesh and Ramat Gan. That's our website. You can get a lot of information. You can reach out. Again, we're going to save questions till the end. That was so that everyone can stay on schedule. And I'll come back here with the other speakers and we'll field your questions. So thank you.
I need to put the microphone on, or no? It's fine. Okay. So thanks a lot, Phil, for your talk and for inviting me here for this seminar. Yes, I guess I was kind of thinking about the same time that in 2008 when they enacted the legislation, and I can remember us feeling that, especially for non-U.S. citizens, this was just a huge loophole in Israeli tax law not to report foreign sourced income. It seemed to us incredible that anybody was, I wouldn't say stupid enough, but generous enough to offer this type of tax break. And I guess the thinking was the entire time that the 10 years would be over at some point, and here we are. So now the question is, I guess we have a few questions for my brief talk, and the first one is I guess, am I in the right place? I mean, is my 10 years really expiring right now? And then if you are in the right place, is there anything you can do to maximize the benefits just before they expire? Just a few words about me. I'm an Israeli tax lawyer. I'm not a U.S. Tax professional. I do strictly Israeli tax, and I'm not an accounting firm. I'm a tax lawyer, so we think of structures and we analyze the legal situation, but for the actual filings, you'll need an Israeli accountant who will talk just after me. So I guess the initial question is really, when did I first become a resident of Israel? And in order to understand this, there's no simple yes or no question. I mean, people come into my office and they say, I know when I became a resident. I got my Tudat Ole on June 6th. It was a beautiful day. I went down to the Misrad HaKlita and I got the Tudat. But that's actually not the day you became resident for tax purposes. Because in Israel, like in Israel, nothing can really be simple and with a definitive answer. The answer is based on facts, circumstances, and what we call center of life. So we look maybe at 5 determining factors for someone who became resident of Israel, and that's where your permanent home is, where your family resides, and talking about family, we usually talk only about spouse and minor kids, not about any kids over the age of 18. Then we look at the date you actually made Aliyah and you came to Israel, your economic interest in Israel, your social ties, and the number of days you spent in Israel, which we'll get to in a second. The ITA position, as originally published, they said, let's take the earliest of. If you have a house here that's available for you, that's the date you made Aliyah. If you actually, your family came and you stayed in a hotel, but your spouse came with you, your minor kids came with you, that's the date you first became resident for tax purposes. Or if you went to the Ministry of Absorption and you got your Tudat Ole or Tudat Ma'ava, we take the earliest of the 3 dates. I think this was published in somewhere around 2010. Now they've kind of backtracked and changed their position. They realized that some people either got their Tu'udot very early, or other people had houses here available for them in vacation and did not actually become a resident of Israel until they decided to change from the foreign country they lived in into Israel. So now what they do, they look at general facts and circumstances. Also, they look at the number of days you spent in Israel. And generally, if you spent 183 days in a single year, or over 30 days, and an aggregation of 425 days in 3 consecutive tax years, you would be presumed to be an Israeli resident. That doesn't mean you can't rebut that presumption. Every taxpayer has a right to argue that instead of becoming a tax resident in 2007, he or she maybe became a resident in 2008 or 2009. And there are also certain exceptions for religious studies, university studies, military services, sabbatical from the university, foreign journalists, foreign athletes. I don't know if there are any here, but anybody who's in that category can say, well, I came just for a certain goal, but not really, I didn't really intend to change my center of life into Israel. We'll just give a brief example, which is based on one of the many, many people we've seen at our firm during the last 10 years. There's a couple with minor children. The wife moves to Israel for school year 2008, lives in a rental apartment. The wife teaches at Tel Aviv University. The husband is still working in his business or as an employee in the U.S. The family retains the family home in the U.S., but then at some point in 2009, they decide to move to Israel. So they sell their home in 2009, but they don't really make Aliyah formally until 2010 or 2011. In 2010, they may buy a house. Earlier, they may live in a rental home, but the husband continues going back and forth, and the daughter actually moves to the U.S. So this is typical. There's no real determining moment. I mean, we do see people who come in and they say, yes, we sold everything in this month of August 2006 or 7 or 8, and we came to Israel. And we moved. But a lot of you and a lot of people you know probably had this dynamic with Israel that included a lot of back and forth. Maybe a family member came for yeshiva or for university or for the military, and I guess it's very important to consult with an expert and understand exactly what your date of residence is, because that affects when your 10 years expire. So you'll hear from Phil and you'll hear from Yoel that at some point you need to start reporting in Israel. But what is that point? And that could have implications, especially if you're going to sell an asset that you have abroad, or you're enjoying some type of income that has a lower tax rate in the U.S., or somebody asked me about Canada. If you're coming from Canada or the UK or Australia, you will generally have moved from a world with no taxation at all, not in Australia or in Canada, on your foreign source income, into suddenly being taxed in Israel. So it's a big change economically, and it's very important to pinpoint the exact date of the transfer. Now, what were you exempt from? It's very common for people to come to my office and say, yes, I have a 10-year exemption from tax. I don't pay tax at all in Israel for 10 years, but that's actually not true. The truth is, the tax exemption for 10 years is only for foreign sourced income. It's not for Israeli sourced income. So if you have, of course, rent on your house in Israel, that will be taxed in Israel. And if you have a business in the U.S., but you're sitting in Israel and working for 30 days a year, for 60 days a year, for 300 days a year, you will need to pay tax in Israel. You were required already during the 10-year period to pay tax in Israel. And we are seeing a lot of cases right now with the Israeli tax authorities suddenly picking up on these people who have not been reporting in Israel at all. And they say, okay, you have a website, but who runs the website? And then suddenly this person says, well, I actually have 10 or 15 people in Bet Shemesh or in Jerusalem or in Tel Aviv or in Herzliya that are working on my website. But since I own the company, we haven't been paying tax in Israel. So an important thing to know when you get into the Israeli tax system, make sure that you have examined that nothing in your past raises any questions. Because the way this worked is actually that a lot of people never reported to the Israeli tax authorities. So they didn't exist in the Israeli tax system. But right now you go and you're going to open a tax file because you have some U.S. income. And maybe you have a company in the U.S. Or maybe you have some consulting fees. And suddenly this person will look, the tax assessor will look at you and look at whatever property you have and ask you questions. How long have you been doing this? Have you been doing this from Israel? What are your other streams of income, and why haven't you been reporting them in the past? So it's important to have a checkup, see that you're in a clean situation before you start registering in the Israeli tax system. So just to get a bit deeper, and again, this is a kind of a world of its own. What is foreign sourced income? And I joke, but this is only a half joke, that in the last 10 years, we became experts, Israeli tax lawyers in my firm, in converting Israeli income into foreign sourced income. Because a lot of the Olim, or a lot of the Israeli residents, new residents and returning residents, are required to pay tax on Israeli income, but not on foreign sourced income. So how can we convert magically Israeli income into foreign sourced income? And there are a lot of devices to do that. One of the simple manners that we used is create a foreign company and have the business in Israel carried out through a foreign company. If you do that, then a lot of your income, especially the dividends from this foreign company, were exempt from tax in Israel, whereas if you had done exactly the same thing and used an Israeli company, that would have created Israeli tax liabilities. So as far as we're dividing it up into categories of income, but business income, all the Israeli tax laws say is the place where the business takes place. How confusing is that? How can you determine where a business takes place? Is that where the clients are? Is that where the employees are? Is that where the offices are? What if this is an online business? Do we look at where the website is? Do we look at where the server is? Do we look at where the hosting is? There are no answers in the Israeli tax law. And in fact, you're going to come before an Israeli tax inspector. If you take 4 or 5 inspectors, they'll have 4 or 5 different answers because there's no guidance on this. And because the Israeli system is very slow, the courts have not really dealt with this yet. I have a few cases that are in process. They're probably going to go to court. So maybe in 10 years we'll have an answer. But right now, it's up for grabs, and your guess is as good as mine, or maybe mine is a little better because I do this for a living. But I mean, it's predicting what the Israeli authorities will think of this is just a very difficult task. Personal services, generally, this is more of a straightforward matter because the law actually says if you're an employee or consultant, where are you physically located when you provide the services? So the tax authorities take a list of your entrances and exits from Israel, and they calculate where you actually provided the services. However, we've been in cases where doctors actually provide all their services when they travel abroad, and when they're in Israel, maybe they'll be on a conference call or fill in reports, but actually their time is much more expensive abroad. So we take the position that the income is generated during the travel and not during the whole year. University professors, they may teach for 4 months, but then get a contract for a full year to do research. Where is this income derived? And because of the exception for foreign sourced income, there's a lot of interplay between the U.S. and Israeli tax system on this. Interest, dividends, and royalties, it's much simpler. Wherever the income is paid from, that is the place where the income is generated. So if you get a royalty stream from the U.S., that's going to be foreign sourced income, even if you, created the intellectual property when you were in Israel. This is interesting for people who write software, who are scientists, who have books or records or works of art that are licensed. That will always be foreign sourced income, even if the person is sitting in Israel. So how can we maybe turn our personal services into royalty streams? That's also a question we dealt with. Rental income is that simple, wherever the asset is used. Just to hit on one point. A lot of people who came from the U.S. Took all their income, whether consulting or business, through an LLC. In the U.S., if you have a single member LLC company, that's disregarded for tax purposes. In Israel, it's regarded as a corporation. So any funds you took out of this LLC are regarded as dividends. These dividends during the 10 years period are exempt from Israeli taxation. But if you take them after the 10 years period, they are going to be subject to tax in Israel. So if anyone has an LLC with accrued profits, it's very important to make sure that you take out these profits and you distribute these profits before the 10-year period. Because if you do this after the 10 years, you may get into an Israeli tax problem. I would just say another thing, which is important. Using an LLC after the 10-year exemption in Israel is complicated. You need to make an election in Israel how to treat the LLC. It's not straightforward. People get into a lot of tax problems by using LLCs, but actually, it's not so difficult to use if you get the right advice. Make sure that you plan ahead if you have or own a single member LLC, or even a LLC with more than one member. Let's just raise some potential issues, but this is definitely not an exhaustive list. There can be many, many, many more issues at the end of the 10-year period. As we said, there's an audit risk. Somebody may look at your tax file. Somebody at the Israeli tax authorities may ask whether you characterize the income correctly. If you go to an Israeli accountant, he will want to make sure that you really were not required to file Israeli tax returns in previous years. Or if you filed Israeli tax returns, there's a question on whether you filed them correctly. This may come up now at the end of the 10 years. Of course, one of the issues with the legislation, which we talked about 10 years ago, is because people were not required to declare foreign sourced income because in Israel, because the 10-year not only from paying tax on foreign sourced income, but also from declaring assets outside of Israel and declaring income streams outside of Israel, no new resident or returning resident was required to declare. So people can, very legitimately say today that they do not have any more information about 2007, 2008, 2009. It's many years. It's difficult to produce paperwork. We still don't know how the Israeli authorities will look at this. There is a statute of limitations, but in some cases they say if you never declared, the statute of limitations has not begun. So there are a bunch of interesting questions about the expiry of the 10-year period. There's potential double tax on foreign source income. Sometimes if you go to an accountant in Israel who's not really proficient, as Philip explained, the U.S. gets the first bite of certain income. Israel gets the first bite of other income. If you make a mistake and accidentally report the first bite in one company, in one country and not the other, you run the risk of getting caught between these two titans. And each country will say, I don't care that you made a mistake in the other country, you need to pay me. So it's important, I don't want to scare you, but it's important, maybe it's too late to say that, but it's important to make sure that you are characterizing the income and reporting the first bite in the correct country. There are new reporting obligations in Israel. In Israel, if you own a non-Israeli company, you need to file a specific tax form. If you have a trust, there are a bunch of tax forms. I just talked to that with Joe before the talk began. If you have a trust, if you're a beneficiary in the trust, if you settle the trust, if someone else settled the trust and you're a potential beneficiary, you may have a plethora of reporting requirements in Israel that you really didn't need to comply with earlier. There's potential double tax because of characterizations. I touched on the LLC problem. What if you were already taxed on the LLC profits personally in the U.S. and now you make a distribution? You may be subject to double tax in Israel. The Israeli law is not really comprehensive. It does not foresee all these issues. But other than scaring you, I'll just maybe add some silver lining to this cloud and say there are planning opportunities. Planning opportunities, the first thing we look at is really people come to me and they say, I became resident in 2006. Let's check. Maybe you became resident in 2008. Maybe you have another 2 years. Maybe you think you became a resident in 2005 and you never knew you had the exemption. Let's check. Maybe you became a resident in 2007. We can analyze this. And really the thing with this is you need to take a position. You don't really get a certificate from anyone saying when you became resident. You decided by yourself, and then you file your tax returns on this basis, and you're either examined or not by the tax authorities. As long as you are basing what you're saying on expert advice, then this is legitimate tax plan. Capital gains. The 10 years end for dividend income. It ends abruptly for interest income. It ends abruptly for royalties and rental income. But if you have an asset abroad, overseas, and you sell it after the 10 years, you will not be paying the full Israeli tax rate. You will actually be paying a rate that's what we call linear calculation. They take the number of years you held this asset before you became an Israeli resident, and they add the 10-year exemption, and then they look at the number of years you held it after the 10-year exemption expired, and you're only going to pay a proportional tax rate to the number of years you're holding the asset after the 10-year period expired, which is usually means that you're not going to pay anything over the U.S. capital gains tax rate for a long, long time. So if you have assets abroad, maybe you don't need to really sell them very quickly. You just need to make sure when you acquire them. Okay? Also, this is a planning opportunity. Maybe you have an asset that you're getting a lot of dividends from. Maybe don't get any more dividends, then sell it in 5 years or in 10 years. That way you're converting expensive dividend taxable income into capital gains. Maybe you have an asset that you think is very highly valued right now. Maybe you can sell it and lease it back, and that way you get a high step-up basis for tax purposes. I don't want to get into all these issues, but just to mention one more issue. If you, at the end of 10 years, are owed money by a corporation, even if you owe the corporation, you can get the debt out even after the 10 years without any Israeli tax, as long as this debt is documented and well planned. You will be able to continue enjoying not paying tax in Israel. Now, if you are a U.S. citizen, you need to make sure that whatever tax planning you're conducting in Israel doesn't create a tax problem in the U.S. But that's, I think, why we're doing this seminar from a holistic point of view, looking at both the U.S. and the Israeli sides of things. One more thing, as far as pitfalls, we talked about trust, we talked about reporting and credits. One more thing, if you have a foreign corporation and you're controlling and managing it from Israel, under the legislation, control management from Israel of a foreign corporation by Oleh Chadash or by a returning resident did not create any Israeli tax issues. But after the 10 years, if you have a foreign corporation and it's controlled and managed in Israel, for tax purposes, it's deemed to be an Israeli corporation, which means it needs to pay Israeli corporate tax, which can create an issue, especially with LLCs and S corps. So also, if you do have any LLCs, S corps, or you're a manager of a corporation, or even if you have a senior position in a corporation that you do not own, this can create issues with Israeli corporate tax, and you should probably examine that as well. So thank you very much for listening. Our offices are in Tel Aviv. This is my personal email. Feel free to send me an email on any issue. Give me a call. You can look at our website, but there's not too much there except for articles, and you probably heard most of it. So definitely feel free to write me, call me. If you have any questions, don't hesitate. Thank you very much.
Okay, shalom. My name is Yoel Shalvi, and thank you for inviting me. I will actually have a very brief talk about what you have to do technically in order to file the taxes according to your situation. Speaker, okay. Okay. Okay, so now we're speaking first of all of people that have overseas income. As Yair said before, we're not speaking of people that don't have overseas income. We're speaking of overseas income and that your 10 years has expired. If you have been filing Israeli income before because you had Israeli income, then once the 10 years are over, meaning you had a tick in Mas הכנסה, then you have to add your overseas income to your Israeli tax return, and like any other Israeli, pay taxes as mentioned before. If you haven't been filing within the 10 years, so let's say you're on Oleh Chadash, within the 10 years, you are either retired and have no income had no income, or you had in Israel income. Not everyone has to file in Israel. You are employed as a Sachir employee, and your income was less than 600,000 shekels. So you did not have to file within the 10 years of any Israeli income. And the foreign income was not filed because you are exempt. Now let's see what your situation is. You haven't been filing for the last 10 years. First of all, the situation can be that you still have no filing requirements. For example, if you have tax-free income, as mentioned before, you have Social Security income, gifts, inheritance, or other tax-free income in Israel. Although the 10 years are over, you don't have to file any Israeli tax return. Um, the other example is if you have income under 334,000 shekel, foreign earned income, and all the taxes were paid at source, you don't have to file any taxes in Israel either. For example, let's say if you sell, your Israeli broker sells the shares of Teva in New York Stock Exchange, and the taxes were deducted at source. There's no filing requirements, although it's a foreign earned income, it was earned overseas. There's no requirement of filing the Israeli tax return. Okay, there is a possibility that you can file a short tax filing and not an extensive tax filing, and that is under these circumstances. First of all, you have passive income. We're speaking of passive income, interest, dividends, capital gains, or rent, foreign earned rent that you choose to take the 15% tax bracket, pensions, as mentioned before, and they're all added together to less than 334,000 shekel, and you pay all the taxes on the short tax return until April 30th the following year. Now, this is a very short form. I didn't scan it before, a very short form. All you have to do is put in your name, Tudat Zehut number, the income, the source of the income, interest, 100,000 shekel, 25% tax. If you had any foreign deduction, this dividend is not the case because Israel, as said, has the first bite. So let's take US dividends. You paid American taxes, you subtract that, you pay the bottom line, the Israeli taxes. That is the short filing, and you don't have to file a full tax return in Israel.
Where do you find this?
The form is online. It's called Form 351 or 352. There's one for interest and other passive income, non-rental, and there's one form for the rental income.
This number is for individual or for family?
I think it's for a family. Everything is for a family, not for individual. It's a family. It's actually for family and kids under 18. So it's for the whole family. I'll talk about it later. Okay, now we get to the situation where you have to file a full tax return and not the short tax return. And these are the cases where someone that has these incomes has to file a full tax return. First of all, if someone has an overseas salary, or he or she have a business in America or elsewhere outside of Israel, or self-employed. If you have passive income over 334,000 shekels a year. If you choose to pay rental income on the marginal rate, not the 15%, as I said before, owned shares in a private company abroad, if you owned assets in over $500,000, or a portfolio in a bank or broker over $500,000, or if you're a beneficiary in a trust, you have to file a full tax return. And when I say old, it means the taxpayer, the spouse, and children under 18. The $500,000 is for the entire family. Okay? So then, in these cases, you have to file a full tax return when the 10 years expire. Okay. Bituach Leumi, as Phil mentioned before, once you file an Israeli tax return, Bituach Leumi picks up the information from the Israeli tax return. And if you, for example, have a salary, you file for the overseas salary, Bituach Leumi will pick up the information that you have a foreign salary, and will ask you to pay 16%, about 16% Bituach Leumi, although you paid self-employment, Social Security in America too. In Israel, the Social Security Bituach Leumi is capped at 519,000 shekel a year. So if someone has an income in Israel, a salary in income of 519,000 shekel, and files for his American income, salary, or other income that is non-passive, that he has to pay Bituach Leumi, if the income in Israel is over 500, up to or more than 519, he or she will not pay Bituach Leumi in Israel on the active income from America. This hasn't changed. I mean, people don't know it. We won't open the Pandora case now, but people that were exempt, as Phil said, for the 10 years from taxes were not exempt from Bituach Leumi. The thing is that Bituach Leumi didn't know that you had foreign income if you had foreign income, and therefore they didn't charge the Bituach Leumi. VAT, usually overseas income is exempt from VAT. I just put it here, but if you have overseas income, if you earn overseas income, there's no VAT requirements, and you don't have to register as an OSEC. Trust is a bit complicated, but basically Americans file in the 1040 for the income from the trust. It was exempt in the 10-year period. Now, if you have interest, capital gains, rental income, business income from trust, it will just pick up on your Israeli tax return like all other income, non-trust income. Just you have to make a note that it is on the tax return that this is income from a trust. The tax office has to know that you are a beneficiary or you have income from a trust. Last point is Atzarat Hon. In Israel, there's a report that is Atzarat Hon. It's called Atzarat Hon. It's a list of assets and liabilities. Once you open a tax file, or of people that had the tax file before, you might be required to fill a report of all your assets and liabilities, which is called an Atzarat Hon. In the past, someone that was within the 10 years had to report only on the Israeli assets and liabilities, and was exempt of filing of any foreign assets or liabilities they had. Now, if the 10 years have expired, Atzarat Hon will have to include the foreign assets and liabilities you have. Thank you. Okay, sure.
Okay, we will now, this is the Q&A section. There are questions that have come in from the broadcast. We'll try to vary them. I think we'll allot 20 minutes to this as well. And I've been told by the technicians here, I'll repeat the question, and then whoever it's relevant to will step up to the podium. So let's start here.
Okay, earlier you mentioned tax exemptions, Social Security. As I recall, it was also state income retirement, if you had a New York City or New York State retirement benefit, and also if you had a military pension coming in. So those were also tax exempt. Has that changed? It was in the treaty.
The question is about, in addition to Social Security being exempt under the treaty, pensions from a state authority or a military a pension so of course Social Security is exempt under the treaty even after the 10 years. With regard to pensions from government pensions, that from a U.S. point of view, that's what's in the treaty.
Correct.
The U.S., Israel, if you want to comment.
New York State government pension
Okay,
and military government pension, Air Force.
I'm not sure. I think that it's subject to taxes in Israel, but it's not more than you pay in America.
So if you pay zero in America,
you
then
pay zero in
Israel. Under that special mechanism that I mentioned that Israel brought in 2002.
So whatever you pay in America, you would pay.
In other words, if someone here has, let's say, a Roth IRA, no, I'm just saying as an example, if they have a Roth IRA, in the U.S. they pay zero tax on that. Israel cannot charge them any tax because in the U.S., if you come to are able to benefit in some way that your tax is zero or reduced in the U.S., you won't pay anything more to
I want to say something about the pensions. The legislation in Israel is that on pensions, you pay in Israel the tax that you would have paid in America, let's say, or on Americans, if it were your only income. Meaning, if you had no other income in America, only your pension, what would have been your tax liability, that is what you will pay in Israel. So let's say you have $30,000 and or $40,000, and in America, if that were your only income, you'd pay $5,000. So you pay the $5,000 in America. Now, when you file your American tax return, the pension is in a higher tax rate because you have other income, and you might have to pay $10,000 on the $40,000 pension. So you'll take a credit of the $5,000 you paid in Israel and pay $5,000 in America. Is that clear? No.
What happens if you have both an Israeli and American pension?
You will pay what will happen in Israel?
Repeat the question.
What will happen if you have an Israeli and an American pension? You'll pay in Israel on the Israeli pension, okay, and you'll pay in Israel on the American pension only what you have had to pay if the American pension was your only income.
Okay. Gentleman in the back. Yes.
Did you apply that to regular IRAs and 401ks?
Yes. I mean, it's interesting. In 2002, the question is, does this apply to IRAs, 401ks, 403bs, all this? And in 2002, we asked Mas Haknasa at the time, please give us a list of what would qualify as a pension under this special calculation provision. So I asked, have any of you gotten that list? Because we haven't gotten it either. So we've been living with this for the last 13, 14 years, and we take the position that all of these things qualify as pensions. No. The question if there's bitul humi, and the answer is no.
So all these are then tax exempt here, or you pay the American tax?
You pay whatever, as Yoel said here. You just repeat it again.
What is the question again?
What do you?
If you have 401 and 403b, and you've got a certain income during that year,
You'd pay. You
and
will.
I pay my American taxes.
So you first have to pay your Israeli taxes on this income.
A
Okay.
little bit of a problem because American taxes are due.
So you make a calculation. Okay, how much you would have paid in America if that were your only income? Okay, don't have to file. You make a calculation. You know that later on in the year you will file in Israel and you will pay that sum in Israel. So you will tell your American accountant to give you an Israeli tax when he files your American tax return on your IRAs, etc. You will tell your American accountant, I'm going to pay on these IRA so-and-so in Israel, take a tax credit on my American tax return against these Israeli taxes.
You have to pay the Israeli authorities before you pay the American.
No, it's the same tax year. You'll do it later on, but you know how much you're going to pay. You can make the calculation.
And for one reason or another, there's a 403b that's tax exempt from the U.S.
So you will pay in Israel. No, you won't pay because it's exempt in. So I'm saying if it's tax exempt in America, you will not pay in Israel because you won't pay more the tax you would have paid in America. America, it's exempt, so you won't pay any taxes.
All right, we're going to take a question from the webinar. Okay, yeah,
Verify David commenced a residency here.
So the question is, how do you verify the date on which your residency commenced in Israel? Generally, the way to do it is by doing three things. First of all, you need to go to a tax expert, and usually in our office, you'll fill out a questionnaire which deals with all the relevant circumstances of your life in the years or year or area of years in which you became resident or started transferring your residence to Israel. Second thing you should do, get your entrances and exits. You can do it from Misrad HaPnim. You can do it through their website, but it's sent by Israeli mail to your address and it never arrives. so better to get there physically, or if you come to our office, we have a person who does it for you. And after that, someone needs to look at all the relevant, it could be oil or somebody like oil or somebody like our office, look at all the relevant facts and circumstances, say, we believe that this is your applicable date. In certain cases, you can go to the tax authorities to ask the question, but sometimes when you ask the question in Israel, you just get an extreme answer, so it's not in every case that it's the right decision to ask
But
the
if you
question.
count every day that you were in Israel for the year and it's less than 180 days, then
The question was, if you count all the days you were in Israel, and it's not 180 days, would that be sufficient to know you're not a resident? So the answer is sometimes, or in certain cases, or it might be. For instance, the method of counting, first of all, is really weird. Even if you have a part of a day, they consider it to be a full day in Israel. We're challenging that, but nobody has decided yet, because it comes out to, if you leave every day at 12 noon and you come back 12 noon the same day, under Israeli law, you're here 365 days, you're here the full year. So it's part of a day is a day. And second thing is, there's also the 425-day presumption in 3 consecutive years. So if you have generally 425 days in over 3 years, you're presumed to be a resident, but then you can argue that you're not really a resident if your center of life remained outside of Israel. So no clear answer. Yes, please.
Is the residency in Israel always falls on January 1st? Or it could happen in the middle of the year also?
Question, is residency in Israel determined from January 1st in each tax year, or can it be in the middle of the year? A question you'd expect to find an answer to in the tax code, right? Wrong, no answer. However, the Israeli authorities, in examples they've given to the public, have discussed residency beginning on a certain date. But this is not anything that's policy. But you can come to a conclusion that maybe you became resident not on January 1st, 2007, but maybe in August 2007, in which case your 10 years expire in August 2017. But yes, that's another thing you need to think of. Webinar?
What do Israeli taxes do?
What do?
What date are Israeli taxes due?
The question was, what date do Israeli taxes due? Well, there's not an answer, but usually depends. Again, it depends. But the end of May, they usually extensions till the end of June for individuals. Then corporate can be later. And if you have a CPA, someone that does your taxes, they usually can get extensions until, if you're an individual, until the end of September too. Yeah.
And all those things that triggered filing a full form on Israel at the end of this 10-year period, it was January 1st, 17. One was $500,000 in assets. Does that kick you into the filing compliance, even if nothing else is
I repeat it. The question was on the list of things that kick you into the filing, full filing, is the 500,000 asset one of the family? Yes. If it kicks you in, the answer is yes.
I have a question. Indicate for the self-employed person who has both Israeli income and U.S. income, what is the tax obligations?
The question was someone that has self-employed that has Israeli income and U.S. income.
Yes.
What are their tax requirements? Obligations. You have, after the 10 years, you have to file income on both American income, overseas income, and Israeli income, self-employed. Yes, and you will pay, as said before, Bituach Leumi or Social Security, both on this income, both Israeli self-employed and American self-employed income. You combine them. Okay, you do the work from Israel. Okay, so you do the work from Israel. You have to pay Israeli taxes. Both. Yes.
Can you say something about double taxation for a Canadian native who's not in Israel?
A Canadian native that now is in Israel.
Yeah. Okay, so unlike the U.S., Canada does not have a tax system that's based on the fact that you're a citizen. So if you're a citizen of Canada, and again, I'm not a Canadian tax expert, but just generally, and you're not a resident of Canada, you generally are not required to pay tax in Canada on your non-Canadian income. So if you have Israeli income, then you will not be paying tax in Canada. If you have Canadian income, then there's a tax treaty between Canada and Israel, and you need to look at the provisions. In many cases, if the income is Canadian sourced, you'll be paying tax in Canada first, but then you do receive Israeli tax credits for whatever tax you paid in Canada. So it's kind of similar to what we were talking about. Yes, please. Yes.
Just in terms of residency, Toshav status. What if you have a circumstance where Made Aliyah had Toshav status, and then because you missed the 182 rule, the Spada Pim took away your Toshav status, and now you're without Toshav status in Israel, having a business in America?
Okay, question is, what if you came to Israel, correct me if I'm wrong, made Aliyah, but because you didn't spend the required number of days in Israel, were basically, they took away your Toshav status. But you still have an Israeli passport? Still have an Israeli passport, not required, no, okay. So, what is the income tax implication now, especially if you have a business in the U.S.? So this is kind of a specific question for your personal circumstance, but I'll use it to illustrate a general rule. The general rule is that there are so many government agencies dealing with Toshav. You can be a Toshav for Bituach Leumi, but not a Toshav for income tax. You can be a Toshav for Misrad HaKlita or Misrad HaPnim, but not for income tax. So each government agency has its own definition, and they're not necessarily the same for each person. So even if Misrad HaPnim took away your Toshav status, Mas Achnasa could now argue that you're still a Toshav for Mas Achnasa because you meant not the 182, but maybe the 425-day rule, or you have a permanent home here, or you have other links. Just another thing I'd like to mention, because somebody said here that the exemption expires on January 1st, 2017, that it only expires at the end of the 10 years. I just wanted to make that clear. It's not, doesn't expire for everybody at the
10 years of what?
10 years from the date you became resident.
You become a resident on the last day of this 10 year, it just goes another. Correct.
If you became a resident yesterday, you have till 2027.
That was my misunderstanding.
22.
This was the initial period.
Yes.
And then
10 years, you got your 10 years. It's not over now. Okay? There's still time. Yes.
I have a dividend question. I read on one of the speeches, I believe him, he said that the U.S. gets first bite at that. So supposing a person with $50,000 a year of American dividend income, how is that going to be taxed once it's 10 years removed? Does it take, I'm trying to understand this. Israel says 25% on dividend income, but do you get your exemption from America? Do you have to send your tax return and they go to the taxable income, or they just tax you from straight 50,000?
Okay, so well, it's for both. It's for both. Let's repeat the question. You get a dividend. Yes. Yes.
From a qualified dividend.
Yes. Okay.
So how is that going to work after the 10 years?
Okay, so
because in America, for example, like, 35, 40, 50, with the exemptions and everything at 15%, a person could almost get taxed nothing.
Right. If the question is asked, if you get a dividend from the U.S. after the 10-year exemption expires, you pay either little or no tax because of the special rules that apply to qualified dividends in the U.S. And what you're pointing out that the U.S. basically, even on something like dividends or long-term dividends, does take into account the level of your income.
Right. And if you have no other income, so what happens?
In Israel, and my colleagues will say, you start at 25%. I think you can reduce it through charity and perhaps nikudot zikui
Okay, but so you're right. You will pay first. You'll pay the American taxes first. So if it's 0 or 5% or whatever, you'll pay. Then you will file an Israeli tax return. It's a flat rate of 25%, and you get a credit of whatever you paid or didn't pay in America. So if you didn't pay anything in America because you had all the exemptions, etc., you pay the full 25% in Israel. And I want to say that in Israel there's a mas yesef. It's 2 or 3% if your income is above 800,000 shekel. So it's actually another tax bracket of another 2, maybe 3% next year. So it's actually not 25, but 27 or 28 if your total income from all other sources is more than 800,000 shekel.
Any way to get that down?
The only thing you can get, Phil said, is charity, and you get your personal nekudot zikui tax credits, but it's only a couple of thousand shekels of credit per year, like a 6,000 shekel deduction on your taxes and your personal tax credit.
I see on the presentation that on rental it's 15%, and then on top of that you pay 16% bituach leumi.
No. The question was on bituach leumi on rental income. Rental income has two options of filing.
Right, I got that. Suppose you opt for the 15%.
If you opt for the 15%, it's exempt from bituach leumi. Okay.
If one
But
time this gentleman
and you do the American method of netting out, gross and gross.
This is very disorganized and unfair.
Okay, no, I'm pointing out
Sorry,
this gentleman here.
I'm sorry. Yes.
The light blue shirt.
If one became a resident mid-year, for example, pick a date, August 15th, 2007, which means that the 10-year exemption is up, I guess, August 15, 2017. Okay. And thereafter, or
then it's taxed again under the linear. If you receive the dividend after, before, same. In some cases, maybe you might not know exactly when you received interest. I don't know if you can calculate exactly, but then I would take a linear. If you have a bond that has interest, or you have a deposit and it's linear and the rates haven't changed dramatically, and they won't change dramatically within the year, you say, okay, I have $5,000 of interest in a deposit or whatever. We take 7 or 8 months out of the 12 will be tax-free in Israel, and you'll pay the 25% only on five months of the 12 months. That's what I would do, and think this is will be accepted.
We're going to take two more questions. Yes.
So I was a bit confused about the rental income because initially I thought that you said that rental income was exempt with regards to paying Israeli tax if you pay under additional state with an X like this. So if you're paying tax in the UK for the last 10 years of making Aliyah, would you then have to declare it all here in Israel and not pay in the UK? How does that work?
You know how it works?
Yeah. No, actually, I mean, it depends. If it's in your name, the asset is in your name. Sorry, I'll repeat the question. The question was about rental income from the UK for the 10 years has not been reported in Israel. Question is, do you start reporting it in Israel after the 10 years? And if so, is it exempt in the UK? So the answer is, even after the 10 years, if the asset is in your personal name, the source of the income will be in the UK because the asset is in the UK, which means that the UK still has first bite at this rental income. And then you need to continue paying tax in the UK just like you paid it so far. And in Israel, you will basically be electing between the two tax tracks, either 50% flat tax, but then you do not get tax credit for what you're paying in the UK, and you do not get any expenses other than amortization or depreciation, or you can take regular ordinary income tax rates and get a full tax credit for whatever you paid in the UK and take all of the relevant expenses.
Then you have to pay Bituach Leumi 16.
I want to say something about Bituach Leumi. The question is, I just found out that Bituach Leumi on residential income, not commercial or okay income, even if you take the marginal tax rate and you manage to prove that this is residential income, they will not take Bituach Leumi on that income. But they ask to come with you want to see the lease and they want to see the parcel, etc.
What happened with the
one second. This gentleman had the last question, and yes.
Different subject. Tax-free municipal bonds are taxed in Israel?
Tax-free municipal ones, yes. Of course.
After the 10 years?
After the 10 years, yes.
Okay.
Is there confidentiality under Israeli law between a tax preparer or a tax consultant and the taxpayer, such that whatever the taxpayer may disclose, or may be disclosing to the tax consultant or the tax preparer, right, is not discoverable or in any way, in any kind of litigation between the, in effect, the Israeli tax authorities and the taxpayer?
Well, the question is the confidentiality between the taxpayer and the... I know that with this gentleman, yes, with lawyers, yes, but with us accountants, no. So, but, we have to say what is the scenario that someone with the tax office will come and say, we want to know the information. It doesn't happen.
What if the tax accountant is retained by the tax attorney? All right, with the tax attorney's confidentiality cover the tax accountant?
Think so,
in the United States, attorneys that we work with, we often, especially in these cases we've been working with a lot in the last years of voluntary disclosure programs, we invariably use an attorney. They sign with something called a Covel letter, and this gives us, we fall under the umbrella of the lawyer's confidentiality. We can communicate directly with the taxpayer, but if there would be any questioning about information, they have to go through the lawyer. In other words, it's a line of protection. Yair can say if it works here.
It's an interesting idea.
Okay, but in the U.S. it does work. Thank you very much to all who have listened. Just if I can ask, there will be a tape of this. Is that correct? There will be a record that we will post on all our sites. Questions, as you can see, can be sent to our offices. If we didn't get a question, we didn't cover your question, or you think of something later. We tried to finish. If anyone's an NFL fan, they can get home and at least see the second half. Thank you very much, and especially to Nefesh B'Nefesh. Thank you.